Let's bring in Jonathan Golub, the chief U.S. equity strategist at Credit Suisse. Jonathan, great to speak with you.
Good to be here.
We did see the reaction in the market. As soon as we heard that the president was going to have a news conference tomorrow, we had the S&P 500s, turn lower. So is this finally, a risk that the market is starting to grapple with?
Yeah, I mean, this is, and that's what we were just hearing a second ago. This is part of a larger China global trade issue. Independent of this, we had trade issues with China. When the pandemic came about, there's been all kinds of concern about the role that China has played in that and their transparency, and that created further tensions. There was some real concerns about the importance of China to our supply chains, which perhaps put U.S. businesses and the U.S. economics at risk, and all of that was already brewing before this issue, and so this is coming at a period in a period of tension between the U.S. and China. And the market, the market wasn't particularly happy about it today. But I think the long-term issue for the markets is, will we see a walking back of global trade in a way which would hinder long-term growth, not just in the current, but really to change those relationships.
So the trade issues, heightened tensions with China to perhaps levels we haven't seen since the beginning of the trade war, Jonathan, and the lack of clarity on earnings. Does it make sense for the markets to be where they are right now?
Well, no. that's the short answer. But we're trading right now like it's 1999, and everything is just terrific. We're trading at nearly a 21.5 stock market multiple. We put out a report earlier, it was actually yesterday, which looks at what the returns are when you start the future returns next decade if you're starting at a 21 multiple. And the picture isn't really pretty for stock market returns when you're starting at an elevated PE.
What's not pretty?
Before dividends, historically, the average is about 0. And I'm not saying that that's what we're going to get. It seems far too ominous, and I don't believe that. But it's likely to be something that's much more suppressed. I think what the Fed has done here is they've pulled forward years of returns into the last 3 months or 2 months. And the result is that they've basically taken it away from future results. And at some point in time, everybody is celebrating this liquidity. But what's liquidity? It's borrowed money. And at some point, we need to pay this back. So, yeah, I think stock prices are too high. Jonathan,
thanks for your time. Always good to
Sure.
speak with you. Jonathan Golub, Credit Suisse. Pete, you're probably the most bullish on the panel on a relative basis. What would you say to sort of counter what Jonathan said, because that's pretty depressing, his finding in terms of the return over the next decade when a PE is 21.
Yeah, I find that interesting. And I tell you, I stood on the trading floors in '99, so I totally understand what really was going on. And he's incorrect on that, because the multiples were absolutely insane. When you look at the NASDAQ, the multiples were closer up into the 40s, Mel. So it's a really different time, and it was done by obviously all this money and all this liquidity, and everything that was thrown at the markets was thrown at it because we all understand what was going on. It was the pandemic, and everybody was doing everything they could after stopping the markets. So I don't know that I agree with the notion that it's even anything close to 1999. Those were inflated, and they were far more inflated than what we're seeing right now. Now, does it mean we're not? We probably are in front of ourselves. This is a pretty rapid recovery. And so I think that part is a little bit concerning, but I just don't see the overvalued side of it as much as Jonathan was laying out there, because when I look at so many different names, you look at the names that are leading, the Big Five, the Power Five, those names are all relatively still reasonable, I think, in terms of price. And then you look over the financials, who have made a little bit of a move of late until today, a little bit of a pullback, but those are trading at incredibly low multiples. So across the board, I can point to so many different areas where I'm not seeing anything even close to 1999 in terms of multiples. So I think if you want me to throw the bull hat in the ring, I will, based on that.